Okay, there we go. Welcome everybody. We're going to do, it's been a while. We're going to do a project evaluation today on the Acquire.Fi platform. We've got a joint community effort today, which is great to see. We love collaboration with other communities, and we're happy to take any questions, and really excited to really just to deliver this evaluation. We've looked at this for a couple of months now, and we're going to do a high-level overview of the Acquire.Fi platform. We have some of the team in the audience. We can take questions after. Yeah, so let's dive straight into it. Let me just get the slides to move on. There we go. Okay, so let's jump into the introduction and what we're probably trying to achieve here today. So like I say, it's going to be just a high-level overview of kind of the potential of the Acquire.Fi platform, what it is, and how we can use it, and yeah, and just some models going forward, and some of our findings from a couple of months of research. So what is Acquire.Fi? It's basically, in a nutshell, it's a mergers and acquisitions platform. So what does mergers and acquisitions mean for those who don't understand the terminology? It's a marketplace where Web3 businesses with some crossover to Web2 can basically list businesses for sale. And obviously, we are very early in terms of the mergers and acquisitions space. So this is the first of its kind platform. There is a couple of examples in Web2, which we'll touch on. But it's very exciting to see this type of infrastructure being built out in the Web3 space. And yeah, we're here very early before on the build. If you could just mute everyone, Toby, that would be great. Also, they have investment pools with real world assets, which are fractionalized. For example, luxury watches, cars, retail, property, anything can within reason that's investable and that has a investment case can be fractionalized via NFTs and a decentralized escrow process. And basically opened up for people who are able to pass the KYC to invest in these assets and basically get some exposure if that's something you want in a luxury watch pool or a property pool or a car pool or whatever. You know, the sky's the limit really in terms of investments, and the Acquire.Fi are very open from what I've seen to kind of community ideas and the ability to kind of pitch your own idea, make a case, and then that pool be put together and crowd investments via the community, which is really cool. So they have their own token in the platform, which we'll talk about with a buyback and burn mechanism for allowing platform access and other features as well. And I think we've spoke probably for the last 9 months in the Yield Labs community about diversification into real world assets. And I think it was kind of in a raging bull market, it's sometimes hard to kind of look elsewhere. But I think those that bought anything out of profits out of the last bear market really took a haircut probably on those assets too when we took the macro downturn. But we definitely preserved a lot more value than, you know, a lot of tokens went to zero, a lot of tokens got locked in different platforms. And if you were able to actually have something tangible in the end of that market cycle, then it served you very well and you protected the majority of your capital. So you're able to do that with this platform and get exposure in different types of ways. So it could be very useful from a portfolio management perspective. And obviously, there's, as everybody likes, speculative upside potential with the token, tokens linked to the business model, et cetera, et cetera. So lots of things to get excited about, and we can model those out and speculate to our kind of heart's content on where these tokens and platform usage can go. So let's look at the investment thesis and kind of why we're looking at it in the first place. As we've, you know, as I touched on there, we are very, very early in terms of mergers and acquisitions in Web3, but there is a huge appetite, and we see some of the higher level businesses already starting to be acquired. And what we're really, I think what this platform is really enabling everybody else to do is all of the other players that have social communities, either, you know, people are building out infrastructure, dexes, launch pads, centralized exchanges, websites with products and services. It gives ability for all of those founders and business owners to kind of exit, and everybody else to gain exposure to those businesses. So it's kind of filling a big gap. Only the big VC money and the big FTXs and Binances making a lot of those acquisitions at the moment. So it really does enable everybody else to get involved, or at least kind of monitor what is going on and look at a single platform with plenty of listings. So like I said, they are first mover. Acquire.Fi are the first mover in the Web3 space from what I can tell. There might be some other platforms, but I haven't come across them. So it's definitely all to lose there. And the trajectory for the Web3 space is obviously clear. That's why we're all here and excited every week to come on these calls and just discuss this space, because it's clear that a lot of tokenization is going to occur, and kind of how that plays out over the future, that's all to be debated, and that's the excitement. But yeah, being able to be the go-to platform, or one of the platforms. There is this space for many platforms in this for mergers and acquisitions. So just to grab a piece of that pie would be great. So already, without the beta version launching to public, there's already 50 plus deals. I think there's $100 million worth of deal flow in the private Telegram channels. So you can see the appetite, even in these market conditions, for sales and for deal flow. Effectively, it's high. So we can only imagine when the market sentiment turns one day, maybe in the next few years, what could happen, and the amount of liquidity looking for a home in terms of real world businesses, and yeah, just moving away from token assets is huge. So the potential is massive. At the moment, even with 50 deals, very few people know about this platform, just because there's not many people left kind of speculating and looking around in this market. So it's really cool opportunity. This is exactly the cycle that we expect. Everybody runs away in these market conditions, and just a few of the people at the bottom of the barrel really left. But these are really the times when you need to track platforms like this and projects like this, and pay attention and watch how they're built, and we can do some models and track performance going forward, because that's how we're able to track our investments and basically, yeah, see where we're going in the right direction. So very exciting. So if we look at some Web2 examples, there are similar platforms to this, obviously not with blockchain technology, nor with decentralized escrow, nor with Web3 businesses, but the traditional Web2 examples are Empire Flippers and Flipper. A lot of you probably know these already, and they've closed a lot of deal flow. This is Web2 deal flow, so those numbers look relatively small for crypto, but as we know the liquidity and the kind of velocity of capital in the crypto space is so much more. So you can just imagine the potential when you add the Web3 element on how many, and you take away a lot of the friction as well, and you add the crowdfunding element, that there could be tremendous potential. You can check out these websites already. They're very well known, and they have a lot of great content, but just something to offer up to show what is already in the marketplace, and the gap for the Web3 platform is huge. So we just touched on some of this. Obviously, in Web3, the friction in terms of payment and acquisition process is a lot less. That's why we're all here. That's why we enjoy using this technology, and the amount of liquidity, even though liquidity has definitely drained from the space over the last 6 months, there's still plenty here, and it needs a home. And there'll be an insane amount more when the market picks back up. So there's plenty of funding, plenty of people looking to park capital in different imaginative ways. So the deal flow is much needed, and access to that deal flow. the hunger, like I say, anyone that's been in crypto from a retail perspective knows that it takes a while to find even kind of token deal flow. It's quite hard to find, a little bit easier in these times, but in the bull market, you literally can't find a deal. It's impossible because everybody's just oversubscribing everything, looking for the quick gains. So looking from a business perspective, being able to acquire Web3 businesses in a centralized place is a great proposition. Obviously, this kind of ties into kind of the hunger for businesses. The efficiencies in Web3 businesses are much greater. The overheads are much lower. So it makes complete sense, even for people that are not kind of nascent with crypto, that they would want you know, some low operational cost businesses with a lot of customer base or potential for the future. So it's clear that there's going to be an absolute scramble to acquire a lot of the higher quality offerings. And again, and in terms of like allocating capital, we've already mentioned that the runway in Web3 is massive. So it's slightly, you know, future-proof capital allocation for anybody looking to put their money in the right place, rather than looking in declining markets or mature markets. So if we just move on to the ACQ token and some of the potential, we can just talk about that. So the token is linked to sales volume, and it's a fee-based structure. I have put some of the percentages in, but I'm also very I'm basically, you know, I know that these fees are going to change over time, and we are very early, so I'm cautious with the percentages that I put in, but so to the bear side, really, just so that we could show some of the potential. But I know that the fees can change up and down, left and right, based on deal size, etc., etc. So it is really cool to finally find some projects that will be linked to sales volume and not just the promise, and then tomorrow that gets turned off. There is a buyback and burn mechanism, and we're able to model the potential and some of these sales scenarios and the price impacts that's associated with that. So it's very exciting. We're going to outline the basic overview today, and then we're going to build with some of these revenue and sales models in the future, but we will touch on it in later slides. So obviously, you can see in the bottom right corner, there's a tiered structure to the deal flow. Basically just lockup tokens. I'm not sure what the lock-in period will be, or if there'll be any lock-in, and then you can access the deal flow. So at the current token price, it's not such a barrier to entry, and it's definitely something you can work up to. But obviously, who knows what the token price does tomorrow or the day after. So and also these tiers can change. So yeah, there's staking incentives too, and as we mentioned before, always everyone loves it, the speculative upside of the token as well. So let me so if you look on the documents on the website, this is just the basic outline. You've seen hundreds of these before, of the token distribution. I'm not going to focus on it too long because it's very hard at a first glance to kind of work this out. So we have broken this down into graphics so that you can actually see what's going on, and you can see the various tranches and vesting, the vesting schedule basically, and the dotted line is kind of the circulating supply coming onto the market at the same time. So I think just in one slide there, we can basically see obviously the tokens ERC20, like many others, and we can see over the next year supply coming online via the various rounds, public, private, seed, angel, and how that affects the circulating supply. So people can review this, go back. We'll publish some of these on Twitter as well, just so people can see the graphics. And what basically, in a nutshell, what this slide shows is that over the next year, there's a lot of supply coming online. A lot of our calculations, we've assumed 100% will get rid of that supply. So we've really, that's not fair at all, but we always calculate things to the downside, just as the worst case scenario, and then anything else that happens a bonus. And I don't really expect most people 100% to unload there. I think there'll be a lot of accumulation, a lot of passing to the stronger hands as well. So, but yeah, you can just basically see that there's a chunk of supply coming on in a linear fashion over the next year, and then that tails off dramatically. So we can kind of imagine tied with deal flow and tied with revenue and buyback and burns, what will happen there. Just move on to the next slide. Okay. Yeah, so that's just another illustration basically of circulating supply coming online versus date. So it's a stair-step fashion. And we can see, sorry, my laptop's just going a little bit slow just as I'm moving the slides. Oh, there we go. Yeah, and we can see what that would take in terms of revenue or buybacks to basically stabilize the price. So anywhere between kind of $200,000 and $750,000 in revenue to kind of offset that supply in an early stage. And that's, like I say, that's assuming that everybody does drop their tokens, which is definitely not going to happen, but we have to model to the worst case scenario. So yeah, it's very, even though we have a lot of inflation, if you like, before the deflation and the burn component kicks in, or while the burn component kicks in and the buyback component kicks in, this is basically what it looks like from a distribution perspective. I can't see my notes on the other side because the grid's in the way, but yeah, we can take questions on that at the end. So obviously, price factors for ACQ, platform, we've mentioned it already, platform performance. So that's sales fees, listing fees, escrow fees, all of the other fees that are kind of outlined in the white paper, and then any other imaginative kind of features and fees that come in, the team can conjure up. So membership and growth is obviously going to grow over that time. It's basically, you know, not, let's call it zero today. So it's going to grow exponentially over time, and listings and sales fees, or listing and sales are already decent numbers considering how early we are. We haven't even got the platform launch. So we expect, I don't think there's been any sales yet, but I think there's a couple that are close, and some of these deals are quite chunky as well. So I think $100 million in deals is the current number, and we can see where it goes from there. I think it's only going to go up. So obviously we only have the double-sided LP staking at the moment. The single-sided staking will come, so that's going to lock supply. And then from the negative perspective, we have to look at and track carefully, and that's what we do at Yield Labs a lot. We do a lot of on-chain analysis and track what is happening with the company wallets in terms of expenditure. Obviously, they have to spend money to grow, but we but as long as we track and make sure that's reasonable, then that's all good too. And then we can offset that against the revenue, and then work out token price. So yeah, there will be a lot of retail speculation and trading. Like I say, the numbers and the eyes on the platform are very low relative to kind of potential. So we expect that to increase significantly as the market turns, stabilizes, and just over time, basically. And the incentives to hodl through the membership tiers, staking, through speculation, through deal flow. There's plenty of incentives. So we expect a big chunk of that supply to be locked, and we will be trying to work that out and bring that to you in a short form slides, so that you don't have to digest the data like we do. So just quickly, like just to illustrate what we've mentioned there, over time, and time, I would probably say let's talk a 1 to 2 year time horizon. We're gonna have a lot more members, a lot more platform access, and then buy pressure just to hold the ACQ, to access the deals, additional listings, increased sales, more buybacks, more eyes on the project from speculation, awareness, interest perspective. And there's going to be token unlocks as well at the same time. and then we're going to hopefully achieve token equilibrium in terms of revenue to sell pressure. Cool. So yeah, we can open up for questions at the end on the ACQ token. I'm sure there'll be a lot. Obviously, I don't work for the company, and we do have Brad here that can probably add some color to any of those questions as well. So, in terms of listings and liquidity, at the moment, KuCoin and from the centralized offering and Uniswap from the DEX, I think it's very brave that the team did launch in these market conditions. And I think, well, I know for myself personally, because I know Jan, the CEO, is not there for a quick buck. And I think that shows if the team was there for a quick buck, they definitely wouldn't have pulled the launch button at this time. And it's almost impossible at this time with in such a low liquidity environment to really achieve positive price action. So I think that presents opportunity. And I put exchanges, are they friends or foe? Everybody wants exchanges, and associate exchanges with positive price action, the more liquidity or the more options. But I think we've also got to be very careful. I've been watching the on-chain with this, and I'm not sure KuCoin, done many favors, to be honest, at this time. That's just my personal opinion. I don't have the hard facts for that, but yeah, I think in hindsight probably just the DEX, but I think it's great that they went with the centralized offering as well and showed the intent. So be careful with exchanges in these environments, because obviously they will take control of a bit of the supply, and then we don't really know what happens from there. So we never really know if the exchange is their enemy or the friend. It's just something to be mindful of. So like we've touched on the sales pipeline, I think they have 50 at the moment listings. I've seen this week's forecast, and there's 4 or 5 more this week. So combined sale value of $100 million, little to no awareness of the platform at this time. I know Ken Mack, I've met him personally in Dubai. He's the chief acquisitions officer, M&A officer. So he's bringing a lot of deal flow. Other team members are working on deal flow as well. So to have that many deals, whether you can argue the quality, I know there's some good ones in there and some not so good ones, but that's just how it's going to be always. That's just the range at this time is quite impressive, to be honest. And I think it's just almost inevitable that one of these deals goes through sooner or later. We have to recognize that the life cycle for turning these deals over isn't the same as buying a token, for example. There's due diligence, there's a lot of different things that has to go on. So yeah, it's going to take a little bit of time for that to get off the ground. But I think building this infrastructure now and being positioned for when the kind of mergers and acquisitions frenzy happens, which is inevitable, whether it's 1, 2, 3, 4, 5 years, is the right thing. And it's great to at least see some deal activity now. So that's really cool. And obviously there's no point burning through marketing spend at the moment. So the marketing effort and budget will increase over time when market conditions turn and platforms mature. There's more features, more community calls, more content out there. We're just so very early, but to see a pipeline like this so early is very promising, and it actually surprised me. So I've just done some we call it back of the fag packet in the UK, but it's just very, very basic burn models, assuming almost worst case scenarios. So just take these as examples. I know the fees are not correct, because I think the sales fees will be a lot higher, but these are just to show you examples of the near term, short term, and the future case. And I think just my opinion is that the platform will achieve way above what I've written down here and in the next slide. So if we just assume that with the current sales pipeline and 10% of those businesses are sold in the next 6 months, and in 6 months in crypto is a long time, 5% sales fees and 20% of that goes back to buyback and burns, then the buyback and burn would be probably $100,000 a year. And this is really a complete bear case where the platform is struggling in difficult market conditions and struggling to get traction. So approximately $200,000 pressure per year on the bear case. And if we look at a bull case, which is with a bearish outlook, so it's still a bear case, to be honest, is like I said, I like to keep things realistic, and I like to overshoot. One of my sayings is I always like to be wrong to the upside. So that's just kind of my style with investing. So increase the sales roadmap twofold to 200 million US dollars, and assume that we achieve an extra 5% in sales, so 15% conversion, with the 5% sale fee and the 20% commission, if you like, and that goes back to buyback and burn. We'd be looking at around 300K per 2 quarters. And I know these 20% sales fees could be 30%. I know we can change these numbers all around, but they're just outline cases. And we are in future sessions after this like outline session, we're going to model this out properly with charts and graphs, and we're going to really overlay it with the current data, and then we can kind of model ACQ against that. So yeah, 600K a year is very achievable, and you can break that down per month. And then obviously future $500 million pipeline with 20% of those sales converted per year is about $1 million sell pressure a year. Again, commissions can change and fees can change up or down or left or right, compared on deal size and turnaround time, etc. So you can quickly see like $1 million buy pressure with a token with this market cap is significant, plus all of the other factors, plus retail, plus hodling, plus everything else. You can do the maths. We're not telling people to invest, but with such a restricted supply, yeah, you can see what's going to happen. So in terms of risks, supply and wallets are definitely risks, and as community leaders, we will definitely be helping out with that. We're already looking at the blockchain in depth, making a map, and we're going to break this down and digest it for people just to try and understand where supply is. We can't do everything in this first session, but where supply is, who's got what, when vesting unlocks happen, where do those tranches go, what do they do with them, and just present this in short form, just so people can understand. Okay, that's why that candle happened, and that's why we're going up at the moment. That's why we're going sideways at the moment. So really, just to put a handle on what's going on this blockchain, and we can see and just present that. Listings, liquidity, and funding. Obviously, we have to pay attention how many more listings happen in terms of exchanges. Liquidity is low in terms of the whole crypto space, and at the moment, and make sure. So we just need to be cognizant that they don't spread too thin. But obviously, the team is experienced in this crypto arena, so I probably more experienced than myself. So I trust the judgment on how they see fit. But I think yeah, just being cautious at the moment. And for overall project funding, I think the team raised $3.5 million, so that gives them a good runway for maybe a couple of years. But I don't think raising would be an issue, but we have to be cognizant and then just watch what is going on and how they're spending that money. Platform performance, which kind of touched on that a lot. Let's just keep an eye on listings. We can track those very easy, and obviously, when we start to see a sale or two, that would be a huge win this early on. Even within the next 6 months, if you see one sale, I think that's like moon scenario already. Not for the token, but just that's incredible performance. I think even 12 months would be a generous time horizon to give. I think that would be fair to give the team that long to kind of start converting sales. But as long as the pipeline is increasing, then it's all good. So yeah, team execution, obviously not micromanaging from a community perspective, but we just need to keep an eye on what the roadmap is, what's coming out, etc. Market conditions, they're just terrible at the moment, but this presents huge opportunity. in terms of being able to accumulate positions over a large amount of time without oversizing positions, and just taking your time in this environment, and just basically fractions of a percentage of the portfolio at a time. And I put sleeping at the wheel. It's very easy. Well, it's not very easy. It's quite hard to be first mover, but then it is quite easy to lose that first mover advantage with all of the above happening, basically. So yeah, the team is hungry. I've spoken to a lot of them, but we just need to be careful that somebody doesn't slide in from the left side, or even if they do, that it's just kind of, it broadens the category rather than knocks Acquire.Fi out. So the opportunity at the moment is a severely depressed price point. It's very, very early in terms of this platform. So fractions of percentage of the portfolio at a time, and the risk reward from a roadmap perspective, a user base perspective, a sales pipeline perspective is handsome, because I don't think we can go too far backwards from zero. It's very hard, and the user base is effectively zero. You know, it's probably in the hundreds, maybe 1,000 people at the moment, which is nothing, and the addressable market is tremendous, and the appetite for tokenization and Web3 businesses. So the risk reward is great, and like I've already mentioned, very small percentage of the portfolio at this time can potentially turn into a decent amount over time. So longer time horizons, and it's obviously not financial advice, but be very, very careful in this market. But very very open-minded to these opportunities at the same time. So yeah, we can track, everything's pretty much trackable, from sales to conversion rates to team performance, which is what we like. I think there's quite a lot of transparency early on, so we need to maintain transparency. Obviously, there's a fine line. We can't have everything disclosed, but I think from a blockchain perspective, I think from a deal flow perspective, I think from a burn perspective, I think from all these areas, we can track it, discuss it, and that's what we're going to do over the next 6, 12, whatever, 18 months. Access to the deal flows is a great opportunity in itself, and being able to kind of build wealth in different ways. We talked about it a lot. I know it's boring to some people because they just want to buy tokens and then multiply within a day, but that's not really how building wealth works. We have to take a long-term approach, and just access to different optionality and exposures to different markets is, even if you don't take that exposure, just learning and the education piece on that is very important. And yeah, portfolio structure, education that's probably what I saw in this market cycle, that next to nobody understood how to manage a portfolio. People perform very well in the bull cycle and then couldn't reposition or restructure at all, and really were overexposed to crypto in many ways, and just got wiped out towards the end, and ended up with nothing, just a pile of dust and worthless tokens, which was very sad. But I think we learn, and as we go forward, I think portfolio structure and education on that is obviously not, we're not delivering financial advice, but just making people aware of topics and talking about these things is what we need to do, and joining these communities, and yeah, we just learn together. And the ability to look at these things early on, build concentrated positions over time. I think crypto is very much about concentration, and concentration doesn't always mean capital allocation. Sometimes you can allocate a small amount of capital over a large amount of time and build a concentrated position or earn via staking or whatever, earn a concentrated position. And I think concentration is very key in crypto positions. I see so many people underexposed, whether in token count at the bull cycle, and they just hold and hold and hold and never realize anything. So yeah, there's a lot of different opportunities here, a lot of different education ways to educate yourself and learn, and lots of discussion points. So yeah, I think it's really cool. It's something I've been looking at for a few months myself with a team, and yeah, I haven't really found anything that I'm too concerned with yet, apart from the overall macro environment, and we have no control over that. So we just have to be patient. So I'm just trying to change the slide. So yeah, that's it from just a kind of high level overview on this platform. I guess unless the team have anything to say or add, we'll probably just open up for a couple of questions, and then we can close the call, and then we can do closed Q&A after. I hope that was useful.
Guys, if you've got any questions, you can chuck them in the chat. I did mute everybody just because you can't be trusted with the microphones apparently. So if you've got any questions, chuck them in the chat box. I haven't actually seen any, Kev. So I think everybody was sort of just taking in everything that you were saying.
Yeah, so I think any words from you guys? I guess if you haven't got any, it's cool. But I think that's we can set the scene just with this session, and I think it's important to set the framework for kind of the topics we're talking about, and then we can elaborate and just build on it step by step. So hopefully that was useful. Hopefully there was a couple of slides that you couldn't find elsewhere. And if you have questions and you don't want to speak now, you can save them for the closed Q&A too. So no problems either way. Lovely.
Any takers, any breakers? Just lots of thank yous, Kev. I think that was a great little overview. I've seen some of those slides before, but I was very stoked to hear this all put together. So thank you for giving us that overview, as always. Epic.
There is a question, Kev. I don't know. There's a couple of people have asked about the Android app being released and sort of a generic mobile apps.
I don't think there's going to be an app. I think it's going to be a PC platform. My recommendation to the team would be don't focus on apps. Just get a desktop working and focus on investment pools and focus on, you know, kind of the decentralized escrow, which is very exciting. There's a lot of functionality that needs to be built first, and getting that right, and legal piece and governance and everything else. So, and fractionalized investments. This is all make sure this technology works, and secondary markets for NFTs and all this stuff. So then, yeah, probably doesn't ever need an Android app, but maybe one day in the future that'll be done. But that's just my opinion. These are all my opinions. They're not opinions of Acquire.Fi. So maybe they see it different.
There's a couple more questions as well coming in.
Yeah, so there's a good one in there as well, which is something that I was thinking about before.
Let's go with the Zoom user one first. That looks quite interesting.
Go on and read it out.
It says, what would happen to the fractional investments in the case Acquire.Fi failed, goes bankrupt, or disappears? Was this covered?
Yeah, that's what I'm talking about. And with the last question, you know, that's a huge piece. From my perspective and my answer, like, who knows? Like, I would say, yeah, we have to look at each investment pool and see where, you know, let's say we invest in a car or whatever it is. Like, these just examples. Like, where's the car held? Who has the car? When's it sold? How's that distributed back? I would say that all these investments have nothing to do with the company in a way, because I wouldn't be, you know, you wouldn't be investing in a car, a luxury car, let's say, if Acquire.Fi held it. You'd be investing in that car if it was held in a vault or held in, you know, storage somewhere else with somebody else, where people actually had access to check that out from a physical perspective. Or it was gold, let's say it was in a vault. So I can't, you know, Acquire.Fi are not going to just go into the vault. They probably can't even go into the vault and take the gold and it just disappear. The physical goods will still be there. So I don't think that's the concept and the beauty of the concept, that, like, unlike crypto, if a project fails, everything goes to zero and there's no liquidity. If this goes to zero, then there's still that physical item, and then it would be split between the pool. But that's a great question, and it's something that needs to be documented properly and answered properly.
I think it's going to vary on a case-by-case basis as well, right? And like, there'll be so many different examples of how they manage this depending on the asset that they're talking about. Like real estate will be different to automobile, will be different to precious metals, will be different even perhaps across jurisdictions. So for example, if you buy something in Europe, the way that they manage that might be very different to, say, if they bought something in North America or APAC or whatever.
When I did the tweet thread, I mentioned that each asset, I think I read that each asset would be like a special purpose vehicle. So whether that gives it sort of some like subsidiary, some sort of subsidiary company under that, that's a possibility. But I don't know. I don't know whether there's anyone from Acquire that can give anything else. But
well, Jan talked.
We'll do it.
Jan talked a lot about SPVs. Yeah, but when I spoke to Jan on that interview, he spoke a lot about SPVs, and I think that you could be right, and that'll be an avenue that they certainly look at for that.
Yeah, I think, sorry, I was lagging a bit there. I don't know whether it was me or Toby.
I think it's Toby.
Yeah, I got the point. It was
always.
I got the point. Yeah, I think these are the types of questions we need. The polls aren't live yet. This is just an overview and gathering all these quality questions, and then we can just, do a session on legal. We could do a session on whatever, and just basically track this and build this out over time, and just watch and look for these failure points. And I think these are all solid questions, and the whole concept of fractionalized ownership of anything is kind of cool, and the mechanics behind it are cool, and then the token associated with that's cool. So that's it. We can, and then the whole portfolio structure, what assets do you invest in, is cool too. So there's lots of touch points, and obviously there's a yield component, because if you're invested in real estate or whatever, then there's a yield associated, which would be distributed back on the blockchain or whatever, so there's lots of cool components.
Cool. Couple more questions.
I think from a recording perspective, we'll drop the recording now. But it was, great to talk to everyone, and we can if anybody that's watching the recording later, you're welcome to join either the Acquire.Fi community or our community, Yield Labs Telegram. If you find Yield Labs on Twitter, then you'll find the link, and come and do the closed sessions with us as well, and just hang out. So yeah, I'll just close the recording now. Thank you very much, everybody.